All right, we are live and I am here. We're going to go ahead and get started. Today is Tuesday, which means it's Tax Talk Tuesday. We do this every Tuesday. We come to you, we give you some area of the tax code that we think that can help you. We normally do this at 2 o'clock. We wanted to do it at 6 o'clock tonight ahead of the debate between President Trump and Joe Biden. So joining me today, I'm going to start off. My name is Beverly Winstead. For those who don't know me, I am a tax controversy attorney here in the Washington, D.C. area. And joining with me is we have CPA, the extraordinary Joy Sistrunk Smith, and then we also have the incomparable business advisor Brent Simpson with Bold Vision Enterprises. So you know what? Let's get right to it, guys, because I know when the report came out, I believe it came out on Sunday about the amount of taxes that allegedly, and all this is allegedly, because let me qualify this statement, because none of us have seen the tax returns. They haven't been released, as President Trump has stated over and over again. It's not released because he's under audit, which I don't know why that still would hold up the releasing of the returns, but nevertheless, could be a privilege issue, anything dealing with when you're talking about legal aspects, which going through an audit is actually a tax law issue. So today, again, we wanted to go ahead and do this ahead of the debate because we're just going to talk about this tax bill, the $750 alleged tax bill, because I was getting texts and phone calls, and Joy, you may have gotten it too.
Yeah.
Like, why am I paying more in taxes than President Trump? So, Joy, I'm going to just go to you. Tell me a little bit about what you know about the tax situation with President Trump, allegedly. And all this, again, is
It's all alleged, and actually, the IRS commissioner that he appointed said that there is no law or nothing that is preventing him from releasing, because it's not privileged information. It's up to him to release it. It is a choice. It is not something that they are saying he can't do. It's really something he just doesn't want to do. And I think based on everything I've read, because it is all alleged, one of the reasons that he doesn't want to release them is because what we're seeing now is that he's not really as great. He touted himself as this great businessman, but if all of his businesses are losing money, then the question becomes, you're not as successful as you told us you are. And so it looks like what you're saying about yourself and what you believe about yourself and what you're telling on paper to the IRS don't line up. And so they don't tell as good of a story. So by us not seeing him, he still has the illusion of he can really create whatever story he wants. And this isn't a partisan conversation. So this isn't about Democrat or Republican. It's about truth, fact versus fiction is basically what it boils down to.
okay. So I think, we have, like I said, we have Brent on here, right? And
Yes.
so Brent is not a tax professional, although he is a business advisor. So we will consider him our layman, right? Someone who's not an expert in the field. So Brent, when you read the articles or heard the news, what were your first impressions?
So from a business standpoint, some people know the history that maybe he is not the business person that he puts himself out to be. But the reality is, I was like, oh, smoke and mirrors time is going away. So the reality comes to play, whether is President Trump the business guru that he puts himself out to be, or does he know how to play shell games very well? And so at this point, the questions all come out, and especially in a business community. Anytime you have strategic partnerships or you're doing business with people who actually have their name on companies with you, it can tarnish their reputation as much as yours. So also think about money being floated right now, right? If he has loans out there and all of a sudden people see he's not as liquid as what he puts himself out to be, they may start calling those loans in. So it could have a huge financial impact on him in addition to his strategic partnerships going forward.
Okay, so got a question for you, Joy. Sorry. Just walk me through what you think might be on the tax returns. Let's start there.
Okay, so based on everything I've read, I think that he had some profitable enterprises, things like his apprentice time and the residual income he's receiving, the book sales and his licensing deals, maybe even with the, I believe it's Miss America or Miss Universe, I can't remember, one of those pageants, because they were profitable at one point. But it looks like all of the other golf courses have so much overhead and so much debt associated with them that they are all unprofitable enterprises. So you have profitable businesses being offset by the losses from all of these other things. And eventually, when you don't have any more, when you get to a certain point, when your losses exceed your income, you have what's known as like a carry forward loss. You can either carry it forward or you can carry it back. And that's what we're seeing with his tax return. And to Brent's point, it's kind of like a shell game because we don't know if the businesses are actually unprofitable or is it because the golf courses are such a large purchase that it's a non-cash issue like depreciation of the golf course that's making these numbers so large.
Right. So from what I read, I saw that on his tax returns, he may have things like real estate businesses,
Mm-hmm,
the golf courses.
mm-hmm,
Those are the things that might be considered not profitable.
right,
And then, so those are two things that certainly can reduce your income because you may have something called a net operating loss,
right,
which in 2017, the law changed. Net operating loss just basically says, as Joya said, hey, if your adjusted gross income, which is a term of art in the tax world, is negative, then you have the ability to carry that loss back, right? Until you use up all the losses. So in his case, he may have had numerous losses, like a substantial amount of losses, which he used and just carried back. For those who are now starting businesses and thinking about doing that, the law actually changed in 2017 with the Tax Cuts and Jobs Act. The new law, well, that law basically said that you can no longer carry back losses.
right,
You have to carry forward losses until you use it all.
right.
That happened in 2017. Fast forward to the pandemic.
Right,
All right. The pandemic happens in 2020. So new legislation comes out, even correcting the Tax Cuts and Jobs Act, saying, hey, I know we said you couldn't carry back losses, but we actually are going to make an exception because of the pandemic.
right,
So for purposes of losses in 2020, and I believe it was 2019, 2019 and 2020, we are going to allow you to carry back losses so that if you are experiencing a financial hardship, you should be able to get a refund and use it to help you through this period of the pandemic, right?
right,
So you have NOL. You also have depreciation, right? Depreciation is a non-economic outlay for the real estate expenses that or the businesses. There's a good chance that he also may be taking depreciation deductions. The third thing I saw that
Well,
people were,
actually, Beverly,
yeah,
I'm representing everybody out there who's trying to figure out what you all are talking about, right?
okay.
And
That's why we
so,
brought you on.
no, that's why I'm here. I'm representing. So for most people who are sitting there going, you said adjusted gross income, and then there's a modified adjusted gross income. What's the difference between those?
That's actually a great question.
it is.
So the difference between adjusted gross income and a modified adjusted gross income really has to do with whatever credit or deduction you're trying to take. So the adjusted gross income, Joy, can you look at let me actually just look to see. Why
And
don't you explain it?
while you're doing that too, I'm just going to jump in. Anybody who's watching this, if you all are interested in asking questions, that's my position. So I will be reading the comments and asking questions that you have as it relates to. It may be the AGI and MAGI that we just talked about. It might be about NOL, and it might be about what is carrying debt forward or back. How does that play out? Like how far can you do it? The questions that you have, please post them in the comments. I will serve as the person taking them on. And think about this, like as we talk about Trump's situation, how does it relate to yours? What pitfalls can you avoid by listening to this conversation? Because Attorney Beverly Winstead and CPA Joyce Sistrunk Smith. They are two experts in their field, and you're getting the ability to get them for free right now. So I suggest you leverage that, ask questions. I will ask on your behalf. And definitely after or during this time period, if you want to schedule an appointment, just drop my hand is up, and we will try to get an appointment scheduled with them to make sure you don't end up in this situation.
Okay. The way I actually like to explain adjusted gross income really has to do with when you look on the tax return, on line 7 of the tax return, it will give you the adjusted gross income. So normally it's your wages, salaries, any interest, dividends, social security benefits, IRAs. You tally all of those up, including your self-employed income, and then you will get to adjusted gross income, that amount. Modified adjusted gross income only comes into play when you're looking at certain deductions and whether or not you qualify for certain credits. Then you would take maybe some pension income out, or you may take social security income out to arrive at the modified adjusted gross income.
So would someone with the income or access to capital like President Trump, would they qualify for, I mean, you talk about going in and pulling money to the modified adjusted gross income side through pensions and so forth. Is that something the wealthy do, or is that something that the wealthy do more than the average individual?
So
Go ahead, Beverly.
yeah, the wealthy they're always looking for ways to use the
Yes,
tax code to
always,
their advantage.
always.
So, even the fact that Donald Trump President Trump is is making income from royalties and real estate properties and those kinds of things, and interest and qualified dividends. Some of the things that um, income characteristics are taxed at different rates. And the
Right.
wealthy is so good at using, and Brent, we know because you're in the stock market, like you are the stock market guru
Mhm.
and the person that often educates me on where I should be, let's say, just investing my money, so to speak, right?
Right.
And so we all know that if you have capital gains are taxed at a lower rate than ordinary income, and that's where the difference is between the wealthy and, let's say, middle class people, right?
Right.
Because most middle class, they make their money through W-2 income, and there's very little opportunity to use the tax code for your advantage when you're a W-2 income person.
Mhm.
Yeah, no, that's true. So this is a question. Somebody actually texted to me. So this is funny. How do lawsuits offset his income, or do they?
So how do losses offset his income?
Lawsuits, because he's sued a lot.
So depending if he's sued as a business and he has to pay it, it is a legitimate expense as long as because you give that person a 1099 as though they worked for you, and he's able to write off the cost of his lawyers as well as the cost of the lawsuit as long as it was related to business. And so that brings up the issue of some of his more questionable items, which may wind up being under audit, such as the payment that went to his lawyer and then went to the young lady.
His
Those
daughter, or
no,
or
I'm talking about the other one.
right, the other lady.
The other lady, the question is that a legitimate business expense? Because it was a payoff. It was not that. So that's actually a bribe. Bribes are technically not deductible. So if he is found to have put that on his tax return, that's going to be one of the issues that comes up. So I believe that even after he leaves the presidency at any point, he's going to wind up being under audit anyway, because he has so much stuff has come out that it's just there's no way. And even Beverly was mentioning he paid his daughter as an employee and an independent contractor, which you can't do both. And she's a partial owner of the company. So you can't be all of those things wrapped up in one. You really have to pick a lane and run in it. So I think now his daughter is actually going to wind up probably getting audited out of this as well as the rest of his children and anyone else that he made payments to.
Yeah, and I think one of the things we'll clarify in this is what we're talking about is only working on the assumption and the information we receive publicly.
Correct.
So
Right.
we don't know the inner workings. None of this is factual because we haven't seen the books ourselves. but based off of what we've gathered from media sources, we're having this conversation. So just anyone listening, just have that understanding as we proceed.
You know, Joy, we often, thank you for clarifying that, Brent. We often talk about when you are a business owner, some of the ways you can shift your personal expenses to your business expenses, right? And
Mm-hmm.
that's one of the great advantages of having a business. So, one of the things that we saw that came out, well, at least when we were doing the research behind the scenes on President Trump, was he deducted like allegedly $70,000 in haircuts, right?
Mm-hmm.
Which is a personal expense, right?
Mm-hmm.
And so I know a lot of times when you and I are doing tax returns, we get clients that want to deduct, let's say, clothing and haircuts and those kinds of things. So what do you normally counsel clients on? Because you know, we know that in some instances you can take it, right?
Right.
So just walk us through your counseling process.
Well, depending on what the client does, and I'm going to tell you, a lot of real estate people fall into this bracket. They want to deduct hair, makeup, clothing. And the truth is, it has to be, especially with clothing, it has to be specific to the business. So it needs to be logoed shirts. It needs to be things that actually represent the business. It can't just be a suit that you bought because you want to look nice for your clients, and then you can wear it to church, and then you can go out to dinner with your friends. And so that's what people don't realize. That is a personal expense. And so we're often just kind of telling people we don't mind being a little bit gray. If the law, if there's a gray area, that's understandable, but we're not going to cross the line because eventually all of this stuff catches up with you. There was actually a famous case out in Baltimore City where a lady was doing lots of police officers' tax returns and deducting everything under the sun. Well, she got caught, and then they literally audited every return. They audited every single person who fell in her tree. And so people were paying thousands and thousands of dollars back for things that they were just thinking were deductible, like, I mean, exorbitant amount for uniform cleanings. I'm talking about $5,000-$6,000 a month. It was actually police officers and firefighters. And so people don't realize that what you do can come back to haunt you, and it doesn't have to be you. It can be the preparer, but eventually it does come back to you if you don't do it correctly. So it's better to do it right the first time.
So let me ask this question, right? I'm again representing the business owners out there who are lazy in some regards. We walk into our, and I'm saying that for myself. Let me be honest. And we walk into tax professionals, Joy, you help me with my books, and Beverly, like I go to you for everything dealing with tax. But when I go, I literally have a hands off, here you go, do what you think is right disposition. For Donald, is this a situation where he can say, well, look, I gave it to them, they're the professionals, and if anybody has watched them talk, it's very realistic to say they made the stupid mistake, it had nothing to do with me.
Never. When you sign your name on the tax return, whether it is in ink or by electronic signature, you are saying that under penalty of perjury, you believe everything on this tax return is correct. So you can be jointly liable with your preparer, and they may face other fees, but you are technically responsible for everything on the return. That's why it is very important that you don't just kind of take a hands-off approach, but that you review it and understand what's on it, and that you're comfortable with it, because you are going to be the one that, when it's said and done, that is going to be responsible for the payment. If there's any jail time, because if there's fraud involved, that's when you can get jail time. We've seen plenty of celebrities over the last couple of years go to jail because of tax fraud. Lauryn Hill, Fat Joe, Ronald Isley. There's been a ton
Wesley
of people,
Snipes.
Wesley Snipes. There's been
No,
a
didn't he
ton of
leave? Didn't he
people
make it
that
to
are gone
Africa?
to jail.
Oh, Wesley Snipes?
I think Wesley made it to Africa.
No, he didn't.
No, he didn't. No,
He was in jail.
Oh,
Okay.
he was okay.
He
So
was in
there are,
jail.
so these people went to jail. Your CPA, your accountant, your tax attorney, they can be, if they're found to be fraudulent, they can go to jail as well. But you are personally responsible for your tax information, no matter what.
Okay, so this is actually great. Let's unravel this a little bit. So there's the myth, and I don't know if it is a myth. You all tell me if it's a myth, that there's a difference between your cousin Stinky doing your tax returns and you going to a professional because you're an attorney or you're a CPA. So when you sign off, all the liability shifts to you. If somebody does it for you, or if you do it yourself, all liabilities on you. Is there any truth to that?
Let me say this. First of all, Joy and I, we want as many people that have businesses, or we want you to really pay the minimal amount of taxes.
Absolutely.
Like we definitely are on your side, but it really comes down to knowing how to do it. So when, as Brent says, if you go to your cousin Stinky, and um, those are a lot of the times when people come back to me to resolve the problem, because I can look at a tax return when a person comes to me after the IRS has audited them, and I can tell why they got audited, because some of the expenses are just way out of line with the income. And so you cannot, this is about doing stuff legitimately. So
Mhm.
even whatever President Trump has on his tax returns, the question is whether or not it's legitimate,
Legitimate.
or whether or not his professionals were just aggressive, right?
Right,
Aggressive
right.
in the tax deductions. So let me say this. I can be aggressive in the tax deductions too, but just know I'm gonna have a conversation with you that um, there's a good chance that you're gonna get audited. So, and I always say, show me the receipts, right? I can take a position as long as it's within the tax code and it makes sense, because the law says that when you do have a business, you have a right to deduct anything that's ordinary and necessary, right?
Necessary.
Ordinary and necessary. So we want you to make sure that you pay, again, the minimal amount of taxes. And I believe it was a judge learned hand. He said there is no duty to pay the most amount of taxes
Yeah.
to the United States government. And so that's what we're saying, but we want to make sure you do it correctly and that you just don't go to cousin Stinky, because at the end of the day, you're going to come and see me, and it's far more expensive to resolve a problem once a problem has happened, like when you're going through an audit, which is one thing I definitely want Joy to talk about, going through an audit, what that process looks like too.
And Joy, really quick, before you go there, I want to ask you guys to kind of elaborate on two things about yourselves.
Okay.
One thing is, Beverly, you're really an IRS litigation attorney. So, in the space that's what you do. Is there any difference between a tax attorney and the fact that you specifically litigate against the IRS for tax situations?
Is there any difference between a tax attorney and a CPA? Is that what you're
No, no,
asking, or
no.
just
I'm
is
gonna
just
ask, the question for Joy is going to be, what's the difference between a CPA and an accountant who's not a CPA? But for
oh
you, being a tax, is every tax attorney an IRS litigation specialist? That's the
so
question.
so let's just kind of do general, in terms of a general attorney. Attorneys practice different areas of law. I essentially specialize in tax law. So in that framework, I've spent significant amount of time understanding and studying the tax code, so that allows me to be able to plan for clients when it comes down to tax planning, and then also defend the positions in tax court, as well as in an audit, or help them resolve tax cases through if they owe a bunch of money to IRS. So that's all I just spend my time doing.
So that's the big difference, is that you're specialized in that versus going to just an attorney who says, I can help you.
Right.
Okay. And then, so Joy, for you, being a CPA, is there a difference between the person who's an accountant and the person who's a CPA?
Yes, so we have to go through vigorous testing. One, we have to have 150 credit hours, which for most is the equivalent of a master's degree. And then we have to sit for 4 parts of a CPA exam. And then we have to maintain our licensure every 2 years, we have to have at least 80 CPE credits, continuing professional education credits, to maintain our license. And we are tracked. So in this case, if we are aggressive or if we cross the line, we could lose our license, which then costs us time and money. So a regular accountant, I've been on both sides of the fence. Before I was a CPA, I was a regular accountant. They're very intelligent. There's nothing wrong with them, but you don't necessarily have as much protection as you do with a CPA, because if something goes wrong with me, I have to have a certain level of insurance. There's all types of things that now the bar is raised because we're CPAs. And so our license is on the line with almost any and everything that we do.
So this is another thing that a lot of people don't know, but I run across often. Um, this is why you want to go to a CPA or a tax attorney, because if they make a mistake on your tax return, there's actually something called reasonable cause.
Mhm.
And the way the law is written is that reliance on a tax professional, a certain professional, it has to be a tax attorney or EA or CPA or someone like that, will help you build a better argument that you should not be hit with a accuracy related penalty, right? You don't get that same protection when you go to, you know,
Stinky.
when you go to someone who is not,
Not licensed.
licensed. So that's one thing. I call it a penalty on actually, a penalty on being poor, because a lot of times, or maybe uneducated, right? People
Right.
don't know that that's an additional protection that you get. The other thing is, when you do go to an attorney or a CPA, is that 99% of the time we have malpractice insurance. So if there is an error, then we're more inclined to resolve the error through our insurance company, and because our reputation is on the line,
Mhm.
than someone who is not licensed.
All right. And you mentioned an EA. Kawan asked the question, what is an EA?
A EA is what they call an enrolled agent. Normally,
Mhm.
they specialize in tax too. They don't have they have the professional requirements to represent people before the IRS, but they can't go to court.
Right.
That's one limitation, unless they passed a certain test for tax court only. But a lot of EAs actually come from the IRS, so when you have a tax problem, those are the kind of representatives that you're looking for. You're looking for a tax attorney, an EA, or
Right.
CPA in most instances.
And so, a fact that you all did not know, I thought about becoming an EA about 10 years ago.
Hmm.
Okay.
And I just wanted to learn more about taxes, though. That was my reason for doing it.
Okay.
But
Well,
now, with that being said, you talked to Joy about the audit process. And, to jump back to that space, what was your question exactly?
so I just think procedurally people need to understand what happens in the audit process, and here's why. President Trump said he's not able to release his tax returns right now because they're under audit. That's one reason why I want you to understand the audit process. The second reason is, when you take aggressive positions on tax returns, there's a high probability that you will get audited, right? And so the question is, can you afford to take
Right.
to hire the attorneys that he's also hiring to defend him in his audits? Sorry. Um, and whether or not you have the stamina, because audits can be long and frustrating at times.
Mhm.
Yes. So I was going to say, from our point of view, the audit process is very, what you talked about, long and drawn out. In his case, from what we understand and what we know, he's been under audit for at least the last 10 years. They've closed some of those years, but there's one position that he took that has about almost $74 million related to it, that if it is an aggressive position, if they overturn it, he could wind up owing, I think, somewhere in the neighborhood of $50 million, because that's going to be removed. So the audit process is not a clean one. You start with a letter from the IRS. They're going to ask you for your records. And if you took this aggressive tax position and you don't have records, automatically you will be penalized. You're going to get accuracy related penalty. You're going to have to go explain to them, and you can't, they're not, people think that they can just grab a shoebox full of stuff and throw it at the IRS agent. Those days are gone. If you don't go in there with your ducks in a row, you have to meet with them, lay out your case, show them documentation. They're going to want to see it page by page. When we've taken clients to audit, they've even asked for QuickBooks files. They've asked for supporting documentation. And those, even some of our clients that we've had to go to support, those audits are taken. Even now, I have a client that's been under audit for 2 years, simply because of Corona is making the process even longer. But that person is paying me by the hour. And that is not, and they have a good position. So if you have an unsupported position, you can pay me and Beverly anywhere from $250 to $600 an hour to support it. So that's a question for yourself. is this worth the cost of the people that are going to have to support me through this? And do I have the time, the energy, the stamina to outlast the IRS? Because a lot of times that's what it is. You just have to outlast them. You have to go through the first level is the first audit, then you can take it to appeals. If that doesn't work, you can work with an appeals agent. That adds time to the process. If that doesn't work, you can then take it to tax court. That can be very costly. So is your extra $5,000 deduction worth the cost of going through all those different steps and paying $10,000? Just it doesn't. So you really have to weigh all of that when you're going through.
Right. So weigh it, make sure you have the receipts. Make sure you understand, or you're working with an advisor that understands the tax law. And if it's a position that you should take, absolutely take it. I don't want to be on here being the bearer of bad news. So again, you
And
know,
you know what? I want to add something up. The other thing to think about though is when you're going to Stinky or someone else that's not authorized to talk to the IRS, when the IRS sends that letter, I promise you, you will not be able to find that person. So then you have to come start over with a new professional. And because Beverly or I didn't prepare to return, you're not in our regular client list. You don't get the client discount rate. You get the regular rate. And so or you can go it alone. And I have seen people try it and they have failed miserably and it has cost them thousands, in some cases, hundreds of thousands of dollars.
Yeah, and I'll say this too, as a business advisor, even my background as a stockbroker, for those that don't know me, and when I was in that space, you would have individuals that say, well, since you know finance, can you tell me this? If you are working with someone who is not directly related to the numbers of how you file and how you manage your books, your numbers, take their advice with a grain of salt, myself included. And it's so easy for advisors to prove their or try to prove their reason for giving you this invoice, right? And so they try to answer every question you have. And it can really get you in trouble. And just because you have an amazing speaker coach and then you start asking them, well, how should you incorporate or how should you file for these receipts? And they start giving you advice based off what they did. Please understand it can cost you far more money than what you think you're saving by not hiring an attorney Winstead or a CPA Joyce Sistrunk to really assist you in that process. Opportunity cost is very real. Now, when you're thinking about this $2,000 savings, $10,000 savings, number one, the fact that the audit can be dragged out in this arduous process. Now you have to think, okay, I have to commit resources to it, meaning time. How much time do I have to go back and forth looking for all these receipts? Is it worth it? In most cases, it's not. At the moment, we're excited, emotions kicking in. We want to beat the system the right way. And this is what happened in Donald's situation. The question is now, did he beat the system in the right way? So just think about this when you're getting advice from someone who is not a tax professional, but speaks very confidently and makes you believe they know the absolute what they're saying is true.
Excellent point. We want to beat the system the right way, right? So here's some tips that not beat the system, but we want to help you to comply with the system, right? So you definitely need to have an accounting system in place, right? Organization is going to be the key. If you have a business, all right, let's actually start from the beginning, right? You want to have separate bank account, right? You want to separate your business from your personal bank account. That's the starting point, right? Do not pay.
Wait, Bev. For anybody who's watching, this is that moment where you want to share this because she's about to give you the steps to what you do right when you have a business, and she's starting from incorporation. So let's everybody, if you could take a moment, listen, grab your pen, share this. This is that time. So, Attorney Winstead, if you can start over again with if you have a business.
If you have a business, one of the first thing I say is you want to talk to the right tax advisor from the beginning, right? To make sure you are set up correctly with your structure, to make sure that they can go over whether or not you have payroll issues, QuickBooks, setting up your chart of account, those kinds of things. I always say, hey, pay for a tax advisory session. That's the first thing you want to do. The second thing you want to do is you definitely And if you can't afford to pay for a tax advisory system, session, what you can do is maybe reach out to SBA or a SCORE, those kinds of organizations, and then they can help you to kind of develop your business plan, because the business plan is really going to be your roadmap, right? So that's the first step. The second step is once you decide whether you're going to be a sole proprietor, LLC, S Corp, C Corp, you go down to the bank. Okay, you need to have your SS4 letter, which is also called the EIN letter, your articles. You sit down with the banker, you introduce yourself, say, I'm about to make a bunch of money. You know, you need to get on my team right now before I blow up, right? And you want to set up a separate business account, a separate business bank account, right? And so you have the separate business bank account. If you don't have any money, what you want to do is you have to make at least a capital contribution to that, right? So whether it's $100 or $500, you want to write a check from your personal account over to the business account. That will be your capital contribution. Keep track that that is your capital contribution, because what you don't want to happen is you don't also want to include that money that you contributed, whether it be a loan or capital contribution, as income, because it's not income. You didn't make income. You just funded your business so that you can get it started, right? So now you have your bank account set up, right? The third thing you want to do is put in place an accounting system.
Absolutely.
Now I'm gonna shift to Joy, because Joy knows about the accounting system.
So you want to get an accounting system set up from the beginning. And I talk to people all the time, and they've been running hard and fast, and you haven't tracked anything, and you're trying to figure it out at the end of the year. The accounting system needs to be set up because it will help drive the business. Your business needs to be numbers driven, even if you are uncomfortable with numbers, because it will help you to see how much money you're bringing in, how much money is going out, and where you may even need to make some adjustments. So we set up the accounting system so that we can track everything. One of the most popular ones, of course, is QuickBooks, but there are other systems. There's FreshBooks, Zero. You can literally use any of them as long as you meet with someone, talk to them, make sure it's set up correctly. And then if you want to run it on your own, I would suggest quarterly meetings or semi-annual meetings to talk to your professional and make sure that what you're doing is correct. So that then when we get to the end of the year, you now have a report that tells you what is going on in your business, and you can take to Beverly or myself to say, hey, help me prepare my taxes. And during those quarterly and semi-annual sessions, what we can also be doing is tax planning. So you can invest in yourself and do the tax planning. So if the business was gangbusters from the beginning of the year, you're able to say, oh, you know what? We need to invest in more in the business, or we need to buy extra computers. We can do some tax planning to, again, minimize how much you're paying in taxes. And that will help you along the way. And then because you've worked with a professional like Beverly or myself, you don't have you won't find yourself in President Trump's situation, because we'll know what's going on and we'll be willing to defend whatever position we took along the way.
Right. And as you are going throughout the year, you definitely want to have copies of your receipts.
Yes.
So that's another thing. A lot of times people keep receipts in a shoebox. When you get audited 2-3 years later, those receipts, if you see the paper now, that the information disappears within 2 months, 3 months. So you want to have a system in place where you're scanning at least maybe monthly or every 2 months, so that when you get audited, you're able to easily identify to the IRS what it is that you actually spent your funds on. It's not enough to have to have your bank records, because you could have a purchase on your bank records to Walmart and swear up and down that that's a business expense. How will IRS know unless they actually see the receipt? Like, they don't know if you're buying diapers, or if you got a legitimate business expense. Same with Amazon, right? You could buy anything off of Amazon. So you absolutely need to have copies of the receipts, right?
And I failed to mention, you actually, in most of those systems, you can actually take pictures of your receipts and just attach it to the expense. Most of them have apps on your phone that allow you to do that as you go along. That's the other reason why the accounting system getting set up from the beginning is very helpful, because then you're ahead of things. Before you even need it, you already have the system in place.
Yeah, and also this is why it's important to have relationships with your professionals on an ongoing basis. Not when things go wrong, not when you all of a sudden hit this bottleneck and you know you made a mistake, but you can't figure it out because now they have to go do the exploration, which you have to pay for. And if you have an ongoing relationship, additionally, we're talking years. Like I have no intent ever to leave either one of these two people when it comes to my business and just talking about it. Because even if I brought somebody else new in, they have to figure me out. They have to understand how I do my business and what they can anticipate what I'm gonna do wrong before I do it, which they have, and they've called me and they've saved me. I mean, they saved me tens of thousands of dollars before with one phone call. And so when you have this relationship, it also reminds your professionals to look out for you. But when every year you're going to somebody new because you're chasing the cheapest price, they don't care about you the same way you don't care about them. And the relationship doesn't exist, and it's a bad business decision. And so for any of you all who are chasing the lowest price, you're probably chasing failure and you don't know it. So just think about it as you move through time and space. What are you really willing to invest in your success? Because success comes with strong relationships. Because even what we want to say about Donald, one of the things even keeping him afloat, it is relationships.
Relationships.
Be it fear or anything else, the reality is still relationships. So what relationships are you making with people that can really help you stay out of trouble and make you money in the process?
Man, that's a great point. I will say this, and then I know we got to get off because I want everybody to have their popcorn popped and they can have whatever drink they want, because again, the debate comes on at 9 o'clock. And I know this issue is going to be raised again. So I'd love to hear more information during the debate. But relationships are key. I've said over and over again, this was my year to learn more about the stock market and being a part of Brent has a company called Investing Education Academy. He comes on every Wednesday night at 9 p.m. So if you are at a space where you really want to act like the wealthy, think like the wealthy, maneuver like the wealthy, the wealthy, they aren't working for their money like that. Like you have to figure out how to make your money work for you. So I would encourage everyone to definitely connect with Brent. Brent Investing Education Academy.
Oh yeah, right here. Because I figured I had to if I'm wearing the apparel, I have to make sure it's directly related to the company. See, I'm telling you, I listen. So is and also just a quick point to that, Beverly. She said that because of the relationship. And as you move through time and space with your professionals, you really will make money. Just because the people she talks to are going to be high net worth people. The people watching this may get curious about what is PG services. I need a CPA in my life. Let me go Google. Let me look them up because of Beverly. Then Joy's people are like, well, who's Attorney Winstead? Oh, I had a tax issue. Let me look her up. And who's this guy? And but the reality is our community starts to wonder about each other and these other people because we're subsets of each other.
Right.
So really, I really stressed like you all want to make this appointment with them. We're going to Q4 was I think 2 days ago, right? Q4
No, Q4 starts tomorrow.
tomorrow.
Thursday.
So we're entering the fourth quarter for anybody who maybe doesn't know Q4. And you want to make sure your stuff is in line going into the end of the year, not waiting until this traffic jam of people lined up at their door, and it happens. So if you all don't think these two individuals in high demand, you're wrong. So schedule your appointment now. Get in going into Q4, not the end of Q4, going into Q1, and kind of make today the day you do your New Year's resolutions. Don't wait till January 1st.
Right. And I'll say this, and then I'll let Joy give her contact information, and then Brent also. If you got PPP loans, let me say this again: if you got PPP loans, you absolutely need to consider a tax planning session. The way the law was drafted for PPP, if you pay it out, it is definitely not a business deduction. So what may happen is that you may think you haven't made money, or may have, you think you might not have taxable income at the end of the year. You may have taxable income. So we want to help prevent you from having a large tax bill. So at the when you file your taxes next year. So because it's going to be too late to do tax planning, then you're going to be very limited at that point in time. So with that being said, Joy, go ahead and give your contact information. How can people reach you?
So Joyce's Trunk, they can reach me at 301-577-6444 on our website, www.pgservicesinc.com, or by email at accounting@pgservicesinc.com.
Okay, and then you can also type that in later. Brent.
Yep. So anybody who's interested in learning about the stock market, other investments, just to really demystify the whole myth that is not for us, you can find us at www.ieamembers.com. You can also just search Investing Education Academy on Facebook and join our group. There's no cost. We're growing. And yeah, it's a great time. We had 81% membership growth in August alone. So we definitely look forward to anybody who's interested in learning about the market.
And you also have a podcast on Amazon, right?
We just got recognized by Amazon. Yes.
Yeah, it's big
So
time, guys. I'm putting you down. I'm giving you the heads up when people are, are in the. Remember when Cardi B was just Cardi? I'm putting you down on the ground floor. You don't want him to say, "Look, I don't dance now. I make money move." Later on, and it's expensive.
Yeah, and my partner Leon Noble is actually watching now. And Leon, if you can put the links in the comments, that'd be helpful.
All right. And I'm going to leave my contact information and then we're going to sign off. For those, again, I'm going to repeat it. Beverly Winstead with the law offices of Beverly Winstead. I am here in the Washington, D.C. area, but we service clients all over the world. My number is, and this is an easy number, get a pen, pad, write it down, 301-306-1234. Okay, you got to remember that. 301-306-1234. You can also reach us at www.irshelpattorneys.com. And you can email me at beverly@irshelpattorneys.com. With that being said, we are going to sign off and see you guys next Tuesday.
Thank you.
Thanks for joining.